Hi there, folks. Welcome to another Chaikin Analytics Minute. I'm David Shulin, as always. Excited to be with you here today to take a deep dive into the oversold section of the pre-trade checklist. What do I mean by that? Well, let's talk about it. When you use our pre-trade checklist before making a decision on entering a trade, we have a section on overbought, oversold. This is one of the important indicators on our chart. Of course, they all work together and in concert with each other. And this pre-trade checklist is a guide, is a helpful walkthrough on reading all the items that are on this chart. Now, the overbought, oversold indicator is our short-term timing oscillator. It helps us to understand if a stock is likely at or near a short-term low or at or near a short-term high. It's not an RSI, though it can sometimes be used in a similar way, right? Specifically, I wanted to focus today on what early and optimal in the pre-trade checklist mean. We get a lot of questions about this, right? Why does CRVL right now say early on this pre-trade checklist? And why does Roku say optimal? They are, however, both green. What does that mean? Well, that's really important. When a stock is oversold, we consider that any stock that is below the dotted 30 line. If you are below this dotted 30 line anywhere in this area, this stock is considered oversold. It is likely at or near a short-term low price, where within the current prevailing trend for this stock is the current price. This helps us to understand if we might be near a short-term low, right? Within a pullback perhaps, or a consolidation, and maybe at a good point for an entry. However, the location of the line, which clearly CRVL right now is below that dotted 30 line, right? The location most certainly matters, but so does the direction of the overbought, oversold line itself. And this is where the difference between early and optimal come in. Because if you look at a stock like CRVL, we can see that it is below the dotted 30 line. We can also see that the line is still on its way down. Notice 2 times ago when CRVL became oversold, how long it stayed below the dotted 30 line in an oversold condition and continued lower. Stocks don't always stay oversold for long periods of time, etc., but we want to try to narrow things down a little better, to follow the trend and look for a little bit of strength within that oversold position. This gives us a higher probability of success that the stock is now moving higher and doesn't, in the case of CRVL, for example, consolidate for a month straight when our capital could be somewhere else. Or in other cases, the stock continues to move lower. CRVL, it only moves sideways, right? So when the direction of the line changes, this is where the difference between early and optimal come in. CRVL is listed as early because we are below the dotted 30 line, but the line is still pointed down. The very first day CRVL's line curls higher and makes a higher number than yesterday's is the day this will switch to optimal. So let's take a look at Roku, for example. Roku's line has curled and begun to move higher, right? I know it's small, but you can see it. It's curled and begun to move higher. And that has caused overbought, oversold to switch to optimal. The most optimal day would be the first day it switches. However, a stock in optimal continuing to move higher below the oversold position likely still has more room to go. Obviously, we want to incorporate where on the price chart the price is, et cetera. All the indicators work in concert together. But the location of the overbought, oversold line and the direction matter. Let's look at a couple others. What about Facebook? Right? Let's close the checklist. What about Facebook? Is Facebook early or optimal on overbought, oversold? Well, we know it's one of the two. It's going to get a green check because it is oversold down here below the dotted 30 line, right? But what about the direction of the line? Well, the line is still moving down. Certainly hasn't moved higher yet, even if it's begun to flatten. That means that this will still say early, and it does. What about SAFM? Is this going to say early or optimal? Yeah, you bet. Look at that line curling itself higher. Yeah, this is going to say optimal. It's oversold and beginning to turn higher in the oversold position for overbought, oversold. That's what that means. That's the difference between them. Now, they both get green checks. They're both oversold. How exactly you choose to use that data is up to you. You may be comfortable getting into something earlier, wanting to not miss a move higher. You may be more conservative and want to make sure that it's turned to optimal and has truly begun to move higher. Everybody is going to approach these things differently, right? But we use our checklist to switch from early to optimal the first day it moves higher. What about Domo? Optimal, right? Moving higher. If we look at the data directly on the chart, we can see this a little clearer as well. I wouldn't recommend we do this every time, right? But we can use our crosshair to see the numerical data here on the chart that creates the visual representations, the relative strength versus the SPY, the money flow, the numbers that create these. That includes the overbought, oversold number, which on July 16th is 9.75. What about the next day? Hello. Overbought, oversold, 11.74. You see it? Now, overbought, oversold has switched to optimal. Overbought, oversold switched to optimal here on the 19th because it moved higher. And continues to stay optimal as it's continued to move higher. That's how it works, folks. I hope this has been helpful, helping you understand the optimal and early indicators to help you find entry points for your strong stocks.